SEP IRAs are a lesser known retirement account or a retirement vehicle that can be used typically by self-employed individuals or small businesses, or if you're employed by a small business. And they can be a really great option for certain circumstances. And all of the important stuff that you need to know about SEP IRAs is going to be covered in this video today. So let's get started. First, let's define what a SEP IRA actually is. So in order to spell it out, a SEP IRA is a simplified employee pension individual retirement arrangement. So a lot of people think that that means individual retirement account, but no, it's an individual retirement arrangement in this case. So it is a retirement vehicle and it works very closely like a traditional IRA. So there are very many common characteristics of the SEP IRA that is for a traditional IRA, but SEP IRAs are run and operated by businesses, and typically they are going to be better for, like I mentioned in the beginning, self-employed individuals or very small businesses. There are some things to consider when it comes to a SEP IRA, such as the tax benefits. So one big tax benefit of a SEP IRA is that it is a business tax deduction today. That's because the employer, in this case the business, whatever that may be, that is who is going to be paying for the SEP IRA on behalf of the employees. So employees do not actually contribute to a SEP IRA, kind of like a 401k. An employee does not have money withheld from their paycheck, and that goes into the SEP IRA. So contributions are all done by the employer. And then once the employees come about that retirement age, or whenever they want to withdraw from their account, their SEP IRA account, they are going to be taxed on those withdrawals, typically almost like a traditional IRA. But when it comes to the business making those contributions to their employees, that should be a business expense on behalf of the business. You might be wondering, maybe you're self-employed or maybe you're a small business. Why should you choose a SEP IRA? What would be some good reasons for that? Well, the first one might be that there's no annual filing requirement for a SEP IRA. So other retirement accounts, such as a 401k, those typically require annual filings to basically say, this is what we have in the assets, this is what our plan is. There's a lot more paperwork that goes into something more complex like a 401k, whereas the SEP IRA does not have a filing requirement currently. And it's a lot quicker and easier to set up generally for a SEP IRA than it is to say, I'm going to keep going back to the example of a 401k. So a lot of small business owners and self-employed individuals will like that about the SEP IRA. And another one is that with a SEP IRA, the contributions that you make to them are flexible. So there is not like a fixed amount that you have to contribute to your SEP IRA, on behalf of the employees. Whereas if you established a 401k, you might have rules in it that say, I have to contribute 5% when you contribute 5%. And so there has to be that 5% company match. Whereas with the SEP IRA, the contributions can be variable. So you, or whoever runs the business, I should say, it gets to decide how much they are going to contribute on behalf of all the employees. Now, one important thing that needs to be said about that is that when you contribute to a SEP IRA, it has to be an equal percentage for all of the employees. So if it's 5% of pay, then it has to be 5% of every employee's pay that goes to their SEP IRA. Another big reason why a SEP IRA might be great is because it immediately has 100% employee vesting. So everyone likes to have their money vested immediately, nothing to worry about when it comes to a SEP IRA. And on top of that, the SEP IRA, just like with many other employer-sponsored retirement accounts, you can still contribute to your own IRA, like a traditional IRA or a Roth IRA. This is an employer-sponsored retirement account, so if you're self-employed, it does not affect your own personal contributions to an individual retirement account. So those are all some great reasons on why you should open up a SEP IRA, but there are definitely some other reasons why you shouldn't consider opening up a SEP IRA, if you're a small business or a self-employed individual. But before I move on to that, I just want to say really quick, if you're enjoying this video so far, make sure you like it and you give it a thumbs up. It really does help me out, and I really do appreciate it. While at the same time, consider subscribing to the channel, because every single week I'm putting out new information and new videos about personal finance, about investing, about saving money, and I just know that there's something that I can help you with. Currently, I'm putting out new videos every Tuesday and Friday at 8 a.m. Pacific Standard Time. So make sure you're subscribed and have that bell on because you don't want to miss them. Now let's move on to why you shouldn't open up a SEP IRA. So one reason why you might not want to open up a SEP IRA is that they don't actually have catch-up contributions. So catch-up contributions basically mean that someone over the age of 50 can typically contribute a little bit extra to their retirement account, whether that be their individual retirement account or like their 401k at work. So with a SEP IRA, there are no catch-up contributions because the employer is the only one that contributes on behalf of all employees, and it has to be an equal amount of contributions. Another downside of the SEP IRA is that there is no Roth version. So the SEP IRA is, like I mentioned before, very closely relates to how a traditional IRA works, except for that is the employer contributing to it. So there is no Roth version of the SEP IRA currently. And then another reason why you might not want to have a SEP IRA is, first off, the contribution rules. So like I mentioned before, when you make a contribution to one employee's account, it has to be the same percentage for every employee of that business. So you as a business owner, you can't contribute on behalf of yourself a larger percentage of your pay than you can, say, to an employee that you might have hired. So the percentages of their pay has to be the same. So if you do 20% to your own SEP IRA, it has to be 20% to all of the employees' SEP IRA of that business. And that brings me to my next point, which is how much can you actually contribute to a SEP IRA? Let's say you have one, you're self-employed, or you have a very small business, with 1 or 2 employees. How much can you contribute to that SEP IRA? Well, the maximum amount that you can contribute is up to 25% of the employee's compensation. So the employer, like I said before, is going to contribute on behalf of their employees. So if you have an employee or yourself, you make $100,000 from your business, the amount that you can generally contribute is up to 25%, which would be $25,000, or the maximum amount of employer contribution limit, which happens to be $57,000 in 2020. So whichever one is going to be greater, 25% of your compensation or that $57,000, which is in 2020 year. So whatever is going to be greater, that is the maximum amount that you can contribute. So let's say that you make $100,000, you can't contribute $57,000 to it because you're capped at a 25% rate. So it has to be, no more than $25,000 in that circumstance. And always remember that it does have to be an equal percentage of every employee's pay. When it comes to a sole proprietor, so if you have no separate business entity, a sole proprietor can only contribute up to 20% of their net profit. So whatever their gross income is, minus their business expenses, that is what's net profit, that is their net income. That is generally subject to only 20% of that for a sole proprietor with no other separate business entity. And you might be wondering, when can you actually use this money that's in a SEP IRA? It is just like a traditional IRA where you can't use it until you are 59 and a half without facing a penalty. So it is like a traditional IRA where the tax is deferred. And so when you go to withdraw it, in retirement, whether you be 59 and a half or not, it is going to be taxed at the individual income tax rate, that level. But if you go to contribute to it before 59 and a half, then there's an additional 10% penalty by the IRS on that withdrawal of that amount. So over 59 and a half, you just pay taxes. Under 59 and a half, you're going to pay taxes plus currently it is a 10% penalty. And that really is probably the most important information about a SEP IRA. But there's still so much more to learn about retirement, about investing, about growing your net worth. And that's why, if you haven't already, you need to watch this video that I created called How to Achieve Financial Independence in 10 Years or Less. It is the basic blueprint, the complete guide to becoming a master of your own cash flow. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.